Alrighty, so yeah, what I usually do when I'm scalping is I start off with my macro fundamental analysis, my bias. That's already predetermined. It's already sorted out before I even jump on the charts. So, like, if you're not quite there yet with doing fundamental analyses, have a look at the one that I've posted in the Discord, and then go from there. And then, like, if you want to do your additional research on it or whatever you want to do, but that's predetermined for direction mostly and understanding. It's a little bit different because macro is mostly, it's not uh, directly applied to short term, like scalping on the lower time frames. A lot of people take positions on the 1 minute time frame. They're only in trades for a couple of minutes or an hour or so, like that. But it's still good to have that overall direction sorted because it eliminates the guesswork. And you can come in and look for only sells, for example, or only buys, depending on your analysis and what your technical analysis, your system is, lining up with. But we're going to get into that shortly. The volatility tracker that I haven't completed yet, I'm working on it because I'm trying to automate the data feed to be automatically pulled into that spreadsheet so you don't have to do anything. All you have to do is click a button to press refresh, and it's all sorted for you. But that will help you determine how much opportunity there is on each asset. And I've picked all the major currency pairs with one minor being AUD JPY and also gold. But I will say it also helps you with that short term direction because your fundamental analysis, the bias, like for example, I'm neutrally sort of mildly bearish in the short term. So it could be the next couple of weeks while we've got all this chaos going on over in Iran and the US and stuff right now. But the volatility tracker might say buy or strong buy. So you'll be able to, because you're scalping on the lower time frames, take that short position, that short buy position, and capitalize off that opportunity. But we're going to get into that now. So that's usually what's predetermined before I even jump into the charts. Then first thing I do, go to the DXY. I want to see what the dollar's doing. Even though you're trading on the lower time frames, it's good to start on the higher time frames. So the weekly, you work your way down. Even just having a quick look, just to refresh your brain. You look at it every day anyway, but it's still good. Obviously, in this period consolidation, we've started to push down. That's what you can initially see on the weekly, the daily. Everything's pushing to the downside. And in this short period of price, we're starting to push up. The dollar has gained some strength, which is great, but that's within that daily bearish immediate viewpoint. We haven't quite broken that area yet, and we're rejecting it. So we've had this strong rejection, haven't closed above. Then we can see had a pullback. We've also failed to close above the previous high again. So that's just indicating that we're holding some resistance at this area, and price is struggling to break through. So that already tells me that I need to wait for a little bit more confirmation on this asset to have a clear understanding short term where it's going. But what I can already gather from what I've already looked at on those higher timeframes, scaling it down, is that we're bearish. So that's sort of the first thing you think about. Higher timeframes are bearish, lower timeframes are bearish. Even though we've got some short-term strength now, we are holding that resistance at the top here, and we're struggling to push higher. So therefore, sellers are in more demand at this point of time. So it would be great to then scale down to the lower time frames like the hourly, the 15-minute, and look for that break of structure. So the hourly ideally be waiting for a stronger break beneath this level here. You can see that internal structure. It's a bit messy, but even just drawing a rectangle here, you can see that resistance 1, 2, then we're pushing down. If we get that break here, that'd be the first internal break of structure, just confirming that direction, which means you can look for buys on major currency pairs. So, and right now, if the alternative is it doesn't do that, I would want to see a break of structure above this level on the hourly time frame. If none of those things happen, I don't want to be taking trades. And that's how you sort of get that directional bias and that understanding before you even start looking at potential opportunities on assets that you're actually trading. So far, we've just looked at assets that, you know, obviously running through the fundamental analysis, then going through the volatility tracker to understand opportunity and risk, but then identifying that using technical analysis on the dollar, which you can't obviously trade this by itself. You have just eliminated so much guesswork, and I think it's super important. As you can see in my watch list, all of these are major currency pairs. So, and the characteristic here is the United States dollar. All of these pairs have the United States dollar. So it would make absolutely no sense for me to not look at the DXY and get that understanding before I even look at these pairs. But now that we've gotten that understanding sorted, we can look at pairs like GBP USD and sort of work our way down. And again, start from the lower time frame. You don't, I guess it's completely up to you at the end of the day, but I absolutely love to start on the higher time frames and sort of work our way down from there anyway. But yeah, weekly, already what I can see is bullish. Daily as well, bullish. Now, for those that call these breaks of structures, I personally don't. And I could make a whole video as to why I don't call the wicks a break of structure, simply because, in short, that's not where all the significance and support actually lies. The wick is there showing that it's rejected this area. This whole wick is a rejection. The actual support and the significance lies within the body. So it makes sense to base those breaks of structures based on the body. And as you can see from this body, if I draw a ray here, there's been no break of structure. We're just waiting on, obviously, that daily candle to close. But right now, we're rejecting this low here, which makes sense because it's pretty in line with what's happening right now on the dollar. Step our way down to the 4 hour. Obviously, the 4 hour on the lower time frames, we're bearish. So weekly, daily is bullish. 4 hour is indicating that we're retracing within this range, which we can clearly see because we're right at the bottom, right now. So bearish on the 4 hour. Right now, I don't have enough. When we were looking at the DXY, it was very quick to sort of get that understanding of where price is going and how it's behaving. On this asset, GBP USD, we've got the higher time frames contradicting the lower time frames, and we're in a bit of a scenario where the 4 hour, we've had price retrace within the daily range, bullish range. So that's bearish, this is bullish, indicating obviously we're retracing within this range, but we're right at the bottom now. And as you can see, what I've already noticed, looking at this time frame, we're consolidating. So we're holding that strength, that support at this low, and we're looking to push higher. If the DXY does what we want it to and actually breaks structure to the downside, that is perfect because we'll see bullish movement on GBP USD. So we'll see this, and it'll actually head up to the high of this 4 hour range. Don't know why that's the hourly. So the reason why that's awesome is because we've done that retracement within the daily. The daily's still bullish, and we're right at the bottom of that range, and we're holding that support. See all these rejection candles to the downside, haven't broken structure, just holding that support at that significant key level, which is there. 4 hour, obviously bearish, but consolidating now. What I would love to see is that confirmation on the dollar, so we get that break structure to the downside, and a similar scenario on GBP USD, where we get a break of structure to the upside, closing above this high here. Then we can look to absolutely smash those buy positions, targeting even the top of this bearish range here with, you know, partials and some potential risks at each of these key levels, just monitoring those when price gets to that area. But again, if that doesn't happen and price pushes up and breaks structure to the downside, price will break structure, take out this low, and continue going further. But by the time that happens, we'll most likely see price break structure here. We'll have that close, we'll have that confirmation, we'll also have that confirmation to the upside here. Then we can look for a retracement here to sell somewhere like this to this low, which is the bottom of that 4 hour range. So that would be the sort of scenario that I would be looking at. It's a little bit tricky because you don't have too much time on the lower time frames to be waiting for such large confirmations on the higher time frames. And if you really want to be aggressive, then you can enter a position, you know, just say we get a 15-minute close, a really nice rejection candle here, then a 15-minute bearish momentum candle to the downside. You could be extra aggressive at looking for buys. But if we form a little bit more structure here on the 15, and then we break structure on the 15 to the upside, then you can look for, you know, aggressive sells on GBP USD. That would be an aggressive and conservative example of both, but that's what I'd sort of be looking for. And in that sort of nutshell, I've just covered what usually happens when, before I even jump into the charts, fundamental analysis, first and foremost, understanding of upcoming catalysts, what's actually happening in the markets globally, general economics, geopolitical events, all that sort of stuff needs to be predetermined, sorted, and understood fully before jumping on the charts. And I think it's absolutely worth the time to do that if you're going to take this seriously. That's sorted. Then have a look at the volatility tracker, which obviously is not in the Discord as of yet, but it will be. You can actually manually calculate ATR as well if you want to do that, but I think I'm going to incorporate that into the volatility tracker anyway, which is another awesome tool to be looking at to understand opportunity and risk. But then you jump on to the DXY, analyze the DXY using technical analysis to identify opportunities and risks to a further extent, and obviously current conditions where prices are currently and where it's indicating that it is heading towards. And then you start looking at opportunity-based assets like GBP USD, Euro USD, and you work your way down the list. So that's how I sort of do my pre-market analyses when I am scalping. A little bit different when I'm managing a portfolio and I'm trading long term. But yeah, if any of you guys have any questions, then I will be more than happy to answer any of those.